Hey folks, welcome back on The Pursuit of Wealth. Today is Friday, October 30th, second to last day of the month, and one more day before the last trading day before the end of the month. So we saw that I did a video yesterday on HEXO's earnings. You can check that out. Make sure to like, subscribe, tick the bell, and you'll be notified on those updates. But we did see that, and I mentioned it in a previous video. You can check out what happens on December 16th. So they were basically approached by the NYSE saying that they were going to be delisted if they didn't get above $1. So they are proposing, they did come in with a beat in their financials. So they did come in with 20 million revenue versus 18 million forecasted. Their EPS was in line with a negative 0.2 cent per share. And like I said, they got this out of the way. A lot of overhang and investor uncertainty because of this. So they're proposing an 8-to-1 reverse share split, which will be voted on in the next AGM, the annual meeting on December 11th, 2020. So in my opinion, I think that's a good thing for them. They also got some write-offs write-downs out of the way, and they have an improved cash balance position as well with 184 million. So I think this could be the worst behind us right now. Shares down over 20% pre-market. We'll take a look at the charts in just a second, but this is in effort to get the share price back over $1 to stay in compliance with the NYSE price listing standards. So you can read this article in its entirety, but there's currently 483 million common shares, and this would reduce it to approximately 60 million outstanding. So again, you can check out that article on yourself on your own time, and just go to hexocorp.com, click on press releases, and you'll see it here at the top. So like I said, revenue beat, EPS was in line. So even though they beat and had highest revenue in company history, we saw that the share price got slammed this morning because, well, A, the market was down, SPY and the overall market, and the reverse split 8-to-1 news, but we did hit a low of 54 cents pre-market. We bounced to 64, so some volatility, bounced 20%. So we were down about 25%. Then we bounced about 19%. Now we pulled back another 10%. So some huge volatility here into the beginning of the day. I did tune into the webcast that just finished as well. So I'll go over some notes here with you folks, but like I said, most important support was 70 cents. We broke that. We saw the huge flush down, and I believe we didn't have any extra support beyond that until the 48 cent range. Yeah, 48 cents. So we did break below that. Actually, we did have some support here on the daily at 61 cents. So that we're looking to regain that level here as well. So 70 cents was the most important, and when we broke out of that daily EQ, that was a red flag. But this is why we don't want to go heavy before earnings. I had a position that I've been accumulating, but I've been just accumulating over the past couple months. So some people down from the all-time highs, certainly getting very depressing at this point. You can see it was down about 95% from the all-time high. So me getting in now, I'm not too worried about a 20% drop because I am buying, which I think is very undervalued, expecting more for HEXO in 2021, and so is their management. So like I said, when we hit a high of $8.40, I'm not too concerned. I'm just taking this as a buying opportunity. We could be setting a monthly high or low here and changing the trend on the monthly, which we haven't done since the all-time high. So again, check out my video yesterday for some more in-depth charting analysis, but I did want to bring up the chart here just to show that we are seeing some rebound here after their webcast had just ended, and their management believes that they are in a very strong position. HEXO on the weekly, so we are crossing here on the stochastic. It looks like we're about to. MACD hasn't crossed yet. We are well below the 10-week moving average now, and we're well below the 50, the 100, and the 200-day moving averages now as well. So definitely a buying opportunity. I bought more this morning. I was planning to add to my position if we saw a negative reaction to the earnings, and then when they came out with the reverse share split, that was just icing on the cake. So let's go over some of my notes, and I got my camera turned off just for being able to focus on this for you guys. So some notes that I took, I got about 3 pages here, so I'll go through it as quickly as possible. So Sebastian, their CEO, and Trent, their CFO, were doing all of the speaking. So management believes they're in a position of strength heading into 2021. They expect 2021 to be a blowout quarter or blowout year and increase their market share. So their top 4 market share right now, closing in on number 3 market share in all of Canada. Their vapes and hash have a great sales, plus their hash has been rated number 1 in the industry. They have no goodwill, and write-offs are now officially taken care of, which they announced in this earnings report. Their original stash is combating the illicit market. It was the first to market. We saw Canopy and Aurora and other LPs rush to do the same, offer a low-cost alternative to combat the black and gray market. They have a plan for more hash products to come, which I found interesting. They saw huge success of their Truss beverages. They currently only have 7 out of 13 SKUs available. So that just notable there that there's still half the lineup still to come, essentially. They have 3 months of market share. In the first 3 months of their drinks hitting the shelves, they have market share leader position. So I'll say that again, they are leading market share in drinks. So essentially they're selling more drinks at the till on a weekly basis than any other company. So they're selling more beverages on a weekly basis at the till than any other company. And that's something to keep an eye on, because Canopy, for one's been out for a long time, their drinks, but and HEXO still has the XMG 10 milligrams of THC coming, which I think will be huge success as well. Powered by HEXO brand, moving into US and Colorado will be another driving factor toward profitability of positive EBITDA and EPS. Israel orders at over 1 million in revenue, and they're seeing strong growth there. Products selling out at an alarming rate. They are optimizing their supply chain to meet those demands, and they want to be the best positioned licensed producer out there. And they are also in talks with other consumer packaged good partners, so that's something to keep an eye out for as well. We could potentially see an M&A or merger and acquisition type of activity, or we could see more of an increased position from Molson Coors, or we could see other CPG partners come into the supply chain as well. Molson Coors, their Truss facility, is continuing to impress HEXO's management. They said that the scalability is huge and impressive, and they don't see any constraints there in the foreseeable future. They have 223 million of capital, 184 million of that, which is cash. HEXO products flying off the shelves. They need to ramp up production and their supply chain in order to meet this, so that the consumers and the retail market doesn't get frustrated with the lack of units to purchase. So people going and loving a product and then coming back wanting to do repeat purchases and not being there, that's something they're working on, as they were the first to bring this cheaper alternative to market, as well as their hash. Their strategy is to dominate Quebec and the SQDC, and now they're focusing on Ontario and the OSC. They just finished their second quarter focusing on Ontario, so they've only been really ramping up Ontario activity for the last couple of quarters, and they're sitting at number 5 market share in Ontario right now, closing in on number 4. They did have some, you may have seen on their earnings report that they had some very well drops as well. That was the edibles that accounted for on this Q4 2020 earnings report. So that classifies under edibles and 2.0 products, as well as vapes, which were only available for a short time, but are now available across Canada. So that and the drinks like the Molo and the House of Terpenes will all be available on the next earnings report. So moving on from there, they're not offering any guidance right now because of the fact that cannabis companies have done that in the past, and it's come back to bite them. But they are on their way to positive EBITDA and positive EPS in the first half of 2021. They have #1 spot in beverages with Molson Coors, like we said. more sales at the till on a weekly basis. Their write-downs were to keep products fresh and to improve their balance sheet, which they believe they have a better position than any other company in the industry at the moment. And they increased the gap from number 5 and number 6% market share. So not only are they moving up in terms of market share, but they also increased the gap from their trailing competitors. Also, regulation changes they foresee to be a catalyst in this space. So once they can start to see CBD products offered outside of cannabis stores, so maybe like a grocery store or that type of thing, they think that's going to be a strong driver of growth and expansion into the US as well. Obviously, we'll see how the US election turns out, but with their partnership with Molson Coors and their strategic investment and market share in Colorado, they're well positioned for that US legalization whenever that day may come. Also, there's a 5-drink limit and 10 milligram THC limit in each drink. So once that's lifted or expanded, they think that that's going to add some positive interest and attention to the space as well. They also focus on low calories compared to the rest of the market. Their Molo, for example, has only 30 calories per beer, and Canopy, as a reference, has over 100 calories in some of their drinks, which are a lot smaller in terms of milliliters. It has, their Molo, for example, has 1/5 of the calories of a regular beer with only 30 calories. And the repeat purchases are very, very high that they're noticing after somebody purchases for the initial time. For the first time, they see a lot of repeat purchases and just overall satisfaction in terms of product demand and product purchases. They are also very heavily focused on their supply and demand processes, and cannabis stores demand changes all the time. So their focus is on innovation, on cultivation, yield, and quality. So they're able to get their cost per gram down, and they're just well on their way. Like I said, they believe they're very, very strong and positioned very, very well in a position of strength going into 2021. They anticipate 2021 to be a blowout quarter. And just taking a look here now, we're up well now 64 cents. So I did add more. I filled at 58 cents this morning, and my average is probably around 65 cents now. So I'm about break even on my long-term position, and we are forming a little bit of a cup and handle here on the 5-minute. We do have some decent volume. Let's just zoom into the 1 minute. Usually we don't have much going on in the 1 minute because of the low liquidity, but you can see there's a lot more buying volume than selling volume at the moment, and holding EMAs well above the 5-minute EMA 12 now as well. So hope you found this information valuable. Let me know in the comments below if you bought HEXO, what you think the company's going to do in 2021. Do you think this is a boom or bust? At least we have the reverse split out of the way, and we can hopefully see better days ahead for HEXO. Like I said, that was a very huge overhang that a lot of people were concerned about being delisted. So now that that should be taken care of, the write-downs are out of the way. No goodwill. There's so many positive things to look to. They'll have more beverages and drinks like the Molo, the House of Terpenes, Little Victory. On the next earning report, we'll have more vape sales, which are going to be a huge revenue stream as well. So, and then we also have a whole lot of, about half of their SKUs in the beverages space that are still yet to come to market. So again, I think a lot of better days are ahead for HEXO, and congrats to the Bears, or congrats to the Bulls who were waiting until after the earnings report, you were rewarded, or congrats to people who are scaling in like myself, who didn't go full 100% invested, because we know that these earnings reports can do that. Again, it's Rod with Powell Group. Thanks again for joining us on The Pursuit of Wealth. Hope everyone has a great weekend and the rest of your trading day, and best of luck out there. Take care.